Well, now we're going to take a deep dive into a stock which I can pretty much guarantee most of you have not heard of. I hadn't. But its reach is global and it's growing. In fact, it's kind of a unicorn as well. So listen to this: growing earnings, dividends, and impact for nearly 50 years. It's called Halma. So why is Halma a core holding for our guest today? A very warm welcome to Claudia Kwan from NorthStar Impact Fund. Thank you so much for coming in.
Yeah, thanks for having me.
What initially drew you to Halma, I suppose, and why is it a core holding in the portfolio?
Sure. So NorthStar Impact Funds is an impact fund, and our mandate is that we can only invest in companies whose core business is solving an environmental or social problem or challenge. And so I pre-vetted the universe, so we have a proprietary universe of stocks that we can choose from, and Halma fell into that because it has one intention around being purposeful, and two, that you can really clearly articulate its impact in terms of defining and measuring the real world outcomes for solving social and environmental problems. From there, we do the financial analysis, and as you spoke to there, it's had the 22nd year of record profits, 46th year of growing dividend by 5%, and it's global and very well diversified. If you look at any of their collaterals, speak to management and read any of their annual reports, it's always led with purpose. And so I think it gives our investors a really great diversified portfolio of companies that are kind of driven by this really long-term structural thematics that I want to be invested in, which is urbanisation, aging population, climate and climate adaptation, digitalisation, and healthcare, which is really what we see as like the long-term positions where we want to have exposure to.
Okay, we'll get there in just a moment, but Halma, as you said, nearly 5 decades of consistent dividend growth and strong return on invested capital. Like, how important is that type of track record when you're assessing companies, for long-term holdings?
I mean, it's super important, especially the model of Halma. The business strategy is really, they're essentially like a PE company, and they have a portfolio of between 50 and 70 companies. Since 1980, they've invested in over 180 companies. So their ability to identify good companies and invest is really measured in that return on invested capital. So that's a really important metric. And then how do they give money back to shareholders? Well, that's through the dividend. And if you see the dividend growing, that's really testament to their ability to effectively play out their business strategy.
It's such an interesting one that you've brought to us. It's London listed because even by owning this stock, you get that diversification that you allude to because they own these other businesses that people touch in sort of everyday life. So just to back a little bit, how do you evaluate sort of purpose-driven companies, and how does that align with delivering returns in your investment thesis and philosophy, really?
Right. So, I mean, it's really talking to that triple bottom line. And you're investing for financial returns, but you want another return that you can actually touch and feel. And that's really articulating it and reporting on that measurement. So with Halma, I think what really drew me to it is a specialist. So they're essentially a specialist in M&A. And they're, through their track record, they're finding really strong companies in niche markets that have a dominant service or product and the ability to grow. And then why would they want to come into the Halma ecosystem? It's for that ability to leverage a listed company's infrastructure, their balance sheet, plus their ability to attract talent, and also their ability to take them global and leverage of each of the other companies. So as an impact investor, we really talk to not just giving capital to a company and letting them invest, but allowing them to grow and accelerate that growth. And often that needs a system-wide approach. So the ability for Halma to do that has been exemplified by the results. I mean, you've got such a strong track record, and so it just shows time and time again that they're very, very clear and articulate about their strategy and very disciplined in executing on that.
Yeah, well, you've answered my next question because it was going to be, how can they achieve this growth, double-digit earnings over every 5 years? Without overextending, but they haven't tripped up so far. So that's the history, the track record.
Yeah, I mean, I think they're really disciplined about being purpose-driven, and they really understand the sector. So what are they really investing for? And once you lead with that intention, it's fascinating how you can find companies that are really overlooked by more sexy investments, as we're seeing right now, like Nvidia or Meta. So these are really small, overlooked private companies that Halma has expertise in. And with that, they can offer them that platform. So the companies they already invest in, they look for companies that have strong returns, they have free cash flows, they have dominant positions. So they're already very good companies. So then why would they want to go to Halma? So Halma offers them the next level of growth, whether it be adjacent markets, R&D, or going global. And that's what I really think you're investing in here, is a specialist in the space, in places that are unlooked or not so well trodden, but are really driving towards all the things that we're seeing. So the tagline is really trying to create healthier, safer, cleaner societies. And that's what we're really seeing. I mean, if you look at if you take a step back, I mean, urbanisation, we're looking at 60% of the global population living in cities by 2050. So what does that mean? You know, and with the climate issues underlying that, which is talking to processes around safer cities, electrification, digitalisation, and then you've got a high percentage of the population that's going to be ageing. So how do we get leverage to that? Well, that's really healthcare solutions. But what I like about Halma, it's not just investing for purpose, but it's really utilising the current environment to get the best outcomes. So they talk to the fact that their portfolio companies are really technology-driven solutions. So they do have that ability to be hyperscalers if they get the support around them to grow properly.
Can you just give us an example, just so that we can sort of visualize something that would be within the Halma ecosystem?
Yeah, sure. I mean, if you talk about safety, right? So safety of infrastructure, safety of people, that's really driven by regulation. Boards are really focused on safety, health and safety. So they have sensors, radars, communication systems. So an example would be a company which does door sensors. It's not that sexy, but it's in 80% of European airports. And what it talks to is the efficiency around physical safety of high traffic areas, and also health safety, so that people don't have to touch the doors. And you know, that really came out of COVID. Like, let's not spread by hand touch. So that's one of the companies that they've invested in. Another would be MK Test Systems, which is really talking to the integrity around electrical systems. So as we electrify planes, trains, passenger vehicles, it's talking to the solutions to ensure that that whole space stays safe as we talk to electric vehicles or autonomous vehicles going forward.
Fascinating. All right, so Halma's themes: urbanization, aging population, climate adaptation. Which of these drivers, or do you have a view on which one of those key themes will sort of be the biggest growth driver going forward? And I guess I'm asking, are those sort of the key themes that really inspire you at NorthStar?
I mean, you've touched on a really interesting point. I think Halma's really business model is quite similar to NorthStar. We're a fund that invests in a portfolio of listed equities, so listed public companies that have all different diversification across impact focus areas and regions. Halma's doing that at a private level. To say which one is driving which, I think we can all see that through healthcare, there is different distinct drivers. We've talked about the aging population, but we've also haven't talked to the AI-backed healthcare, which is a really big driver for what we're looking for the next decade and beyond. And then if you talk about safer cities, the electrification of our cities means that sensors and communication systems are going to get much more effective, not only in allowing the cities to be more efficient and cleaner, but also in transferring data. So one of the key companies that Halma always talks to is Deep Trekker, which is they have remote operating vehicles that can go about 300 meters below the water, the ocean level, and they're actually vehicles that are equipped with cameras and sensors, and they're mapping out the ocean floor to monitor the ecosystem of the ocean. And that's really important as we move through this climate period where we might see some adaptation and moving at different rates and changes.
Yeah, people in South Australia know all about that as of late. So niche market leaders, how does that diversification benefit the NorthStar Impact portfolio? Like, what role does Halma play in your sort of overall strategy?
So, I mean, partly I have been invested in Halma for many years, and we've been on this journey together where impact investing or purpose-driven companies are not super mainstream yet. And we've been working together to really articulate and formalize and communicate our impact to investors. And what does that mean? And so Halma's collateral, I say, would be best in class in terms of trying to report what they do in a way that talks to the financial returns and other returns. The other piece that Halma does, because they're across so many different pillars in so many different geographies, it gives you that ability to be exposed to so many different impact focus areas and the lessons back. So being right on top of what are catalytic areas where we want to be in, and themes that we want to be invested in, that we can create big impacts for driving capital to making better communities.
Yeah, wonderful. Look, we've had a couple of questions come in. One of them has asked from Jen about paying dividends. I think we answered that for Halma. Do companies that are investing for impact pay dividends? So maybe you could just address whether dividends is something that you look for as part of your investment thesis generally at NorthStar Impact.
So it's not a general thing that we look for. I mean, we have companies certainly that are free cash flow generative and therefore would be expecting dividends. However, some of the companies we're invested in are pioneering in their space. So a company that we invested in recently was a swappable battery for heavy duty vehicles. So logistics decarbonisation, especially in heavy duty vehicles, is new. I mean, we don't really have, especially certainly in Australia, a solution to that. And so when you've got these companies who are at the early stage, they clearly invest in, and therefore they don't have that free cash flow generation and therefore the dividend. But what you're really investing for there is metrics such as sales growth, earnings growth, or an ability to identify that the business has operating leverage. So you're looking at the robust ability to ensure margin and to be able to grow that margin through time. So we have what we'd call like an agnostic style of investment. So we're not going for free cash flow or dividends or growth or value. We're trying to actually have exposure across that space. So we have like a lot of diversification across factor risk.
Halma has recently exceeded its 2025 renewable electricity target and has some pretty clear net zero goals. How do you factor that into your investment process, particularly when it comes to some of these industrials?
Yes, so as an impact investor, we're not ESG, although ESG is certainly part of our investment process. So I look at ESG as being a process, a risk mitigator as we assess every investment. So how a company does what they do is probably the ESG piece. And with Halma, we look at that in terms of not only the environmental impact that their companies make and their ability to try to mitigate those environmental impacts, but also gender diversity at the company levels and at their board level. So with Halma, we talk to their initiatives around that, but what we're trying to actually measure is the impact of what the companies actually do as well, first and foremost.
I think I should probably ask something about risk. So, what metric, what signal, financial or otherwise, do you think encapsulates what Halma is executing well? Or, is there a risk that or financial metric that would make you sort of reconsider your investment thesis?
Yeah, so the company really talks to that geographical diversity to allow you to not have overexposure into sort of geopolitical hotspots or hot zones, etc. So it's really monitoring when they do a new acquisition where that exposure is, also with currencies and currency movements around, and the risk that they invest in something that actually isn't purpose driven is also a key factor. And then finally, just what they're leveraged to. So through time, you've seen Halma consistently deliver. I think they had a little bit of trouble after COVID when we had that very, very high inflation period, and also the lack of mobility. So Halma, they say if you go from your home to office, you might cross 50 to 100 Halma products.
Oh, really?
And so without that mobility and that movement, you don't really get the leverage of the company. So COVID was a specific period. So it's really trying to identify what kind of risks are associated with the underlying companies, but they have 30% or 40% leverage to healthcare and 30% in each of the other pillars. So aside from the macro piece, it's really the company's ability to keep delivering on that return on invested capital, because that really talks to their discipline around acquisitions and keeping true to label in terms of finding companies who are able to grow organically and then inorganically, whether it not be through adjacent bolt-ons.
They must have very strong management to have been delivering for this long.
Oh yeah, phenomenal management. And when you talk about the culture of the company, which we probably haven't touched on, they consistently iterate the talent. And what I really appreciate about them is that when they acquire companies, they allow the founders or the CEOs of those companies flexibility, so a decentralized model, but then they really try to encapsulate them into a culture of Halma, and talent and succession, which is something that they consistently talk about, is really paramount to their business strategy, and it's really the core. And I think a lot of companies talk to that, but the evidence of it really is in the data and the performance, which they've proved through time for sure.
Yeah, fascinating. Look, we're out of time, but I did get a cheeky question in from Anthony. Thank you. And he asks, is there any company like this, brackets, impressive, exclamation mark, listed in Australia? I mean, I guess maybe that's why you've had to go global for this one.
Yeah, I mean, it's tricky. You do have some companies actually leveraged in this electrification space. I think Genus Plus or Tasmea is in our portfolio, are consolidators, in that electrification space. So you actually are seeing it in those places. So you've got not mum and dad shops, but smaller private companies, which were there incubated into their system to have a broad portfolio of product offerings. So absolutely in those spaces you can see it. I think probably in the mining services space there might be a few of, but there isn't one that's across all the impact pillar areas that go from healthcare all across through climate and into that sort of urbanisation thematic as yet.